On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice. It doesn't take into account your financial situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. So, before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services in that regard, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics, including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. Hi, team. Hope everyone's well. Now, I've been on leave for a couple of weeks, so I haven't been watching markets quite as closely as I usually would, but I have had one eye on things, so I thought I might just jump on here and do a shorter than usual week ahead, wrapping up what we saw last week and with a few very brief thoughts about what is coming up over the next few days and what I will be keeping an eye on as I get back into the swing of things after a very enjoyable 2 weeks off for the April school holidays. Now, we have seen a bit of a sell-off this month. The US market, which hit a new all-time high, I think, on the very last day of March, found itself down 5.5% from that all-time high at one point a week or two back. But we have seen a rebound last week. The S&P 500 was up 2.7% last week, so it's earned back some of that 5.5% decline. And that performance last week was actually the best we've seen in almost 6 months. So that was a very good result, better than expected, and it actually came despite another hotter than expected inflation report. The last 3 months or so, we've seen inflation readings in the US coming in stronger than expected. That's partly because the economy is strong over there, so it's not all bad. Those two things do tend to go hand in hand. But last week, we saw the headline PCE inflation measure, which is the Federal Reserve's preferred inflation measure, that increased at an annual rate of 2.7%, which was a little bit more than expected. Last month it was 2.5, so it's jumped up to 2.7. Markets did expect it to jump up, but they only saw it coming up to 2.6. So 2.7, look, absolutely not terrible. The Fed would rather it be 2. But 2.7 is better than 3.7 or 4.7 or 5.7, and those are the sorts of numbers that we have become very accustomed to over the last couple of years. So 2.7 certainly not the end of the world, but it is another piece of evidence that inflation is still quite sticky, and we're not seeing it come down quite as quickly as people were hoping for. But the market performed well despite that inflation print. And I think part of the reason for that, a big part, has been some very good earnings releases which have driven the gains. The likes of Google, the likes of Microsoft, very strong earnings reports. And we're about halfway through the quarterly reporting season. 46% of companies in the S&P 500 have now reported earnings, and 8 out of 10 have beaten expectations. So it hasn't been too bad in terms of the reporting season. And I guess that is the other side of that high inflation coin. You've got high inflation because you've got a strong economy, you've got a robust labour market. That is not great from the Federal Reserve's perspective, but it also does reflect quite strong economic activity, which is good for corporate earnings and share prices in that regard. So it is sort of a case of you got to take the good with the bad. We're winning on the one hand and we're losing on the other. But on balance, we have seen some optimism emerge over the last week or so. Most other markets were also quite strong, particularly the UK market. It was up 3.1% last week. So the UK market is actually sitting at a new all-time high, the FTSE 100. And it has been a better performer over the last month or so than the US and Europe and Japan and many of these other markets. And that's quite interesting because this is exactly what we saw in 2022 when inflation was rocketing ahead and you saw interest rates rising quite a bit, and many markets were under a lot of pressure that year, 2022, the year before last. But if many of you do recall, and certainly if you were listening to my podcasts at that time, in 2022, the UK market was one of the markets that did buck the trend, and it was stronger than most. And one of the reasons for that is because it is a market that does tend to do okay when you've got high inflation. Lots of materials companies, mining companies, oil companies, energy companies, that sort of thing. So that's interesting that you've seen that same sort of dynamic come into the mix in recent weeks too. So the UK market's strong last week, and it is one of the best performers through this month of April. That has proved difficult for most. Europe was up 1.4% last week, Japan up 2.3%. Emerging markets very strong, good rebound from emerging markets, up 3.7%. New Zealand and Australia up ever so slightly, but pretty much flat. Most markets are down this month. They have given back some of those gains that we saw in the first 3 months of the year, and they're off the boil a little bit in April, the UK aside, but most markets are up in 2024 on the whole, particularly when you consider currency moves, which have largely moved in favour of New Zealand investors. Apart from in Japan, the yen has been one of the few currencies where the Kiwi has appreciated, and it's been more about yen weakness than New Zealand dollar strength. The yen has been weakening against most other currencies. Interest rates moved a little bit higher. We saw the New Zealand 5-year swap rate, which is a wholesale interest rate, that was up 12 basis points, finished the week at 5.2%. That's the highest since November. The US 10-year Treasury yield ended at just under 4.7%, so that's also the highest since November. For a bit of an update on where markets are at in terms of rate cuts, as many of you will be aware if you've been following markets recently, the strong inflation that we've seen in places and the strong economic activity has seen financial markets push out their expectations for the first cuts in interest rates. The next move is still expected to be down in New Zealand, in the US, and in other places too. But that move down is not expected to come as quickly as people thought before. So here in New Zealand, markets see just the one OCR cut this calendar year. They see that may be coming in September. That's priced in to the tune of 55%. So you may as well call it a coin flip, 50-50 in the eyes of financial markets. That's September. In November, that rate cut is fully priced. So markets are still confident that there will be an OCR cut this year, but they now see that coming in November rather than earlier. It wasn't so long ago where the market saw August as a potential opportunity where the Reserve Bank might choose to cut. So now they think we'll still get a cut, but it'll come in November, and then next year will be when we'll really see the OCR come down. In the US, not dissimilar. It wasn't so long ago that the market saw June as an opportunity for the Fed to cut interest rates. That always felt a little bit too early to me, and now we've seen a few hot inflation readings. Markets have changed their tune there. They see one or two cuts this year, at least one, maybe two. The pricing is kind of assuming that we might see 1.5. So that's the market saying we think we'll see one. Second one, well, that's a 50-50 call. So maybe one, maybe two. Pricing at the moment suggests a 73% likelihood of a cut in September, and that goes up to 96% in November. So November potentially shaping up as the time when you might see that first interest rate cut. Remember, you got an election in the US in early November, so maybe that will be a factor as well. Anyway, looking ahead, this week is a really busy one. There are some really important US economic releases, and there's also a Federal Reserve meeting. So in terms of economic releases, we'll have the latest ISM manufacturing index on Wednesday, Institute of Supply Management. That's what ISM stands for. This will cover the month of April, I think it will be, won't it? And it is expected to be solid, above break even, which is 50, only just though. That would be on the back of last month's surprising push back into expansionary territory. This measure of the manufacturing sector has been below break even, below 50, for about a year and a half. And a month ago, it went just above 50, which was a bit of a surprise. People didn't expect that. That's quite positive. It suggests that the manufacturing sector has at least found a bit of a base. It's a bit more stable. It's not growing. It's not getting a whole lot better, but it's not getting worse. It's stopped bleeding. So that will be out on Wednesday overnight. The other big release we'll get will come on Friday, and this will be the jobs report for April as well. And we get this monthly in the US. Markets are expecting 250,000 new jobs to have been created in the month of April, and for the unemployment rate to remain unchanged at 3.8%, which is quite low in the context of history. I think it got as low as 3.2, 3.3, 3.4 maybe, and that was actually about a 50-year low not so long ago. It's lifted a bit since those levels, and it's now sitting at 3.8, which is still very low, still a reflection of a robust economy and a strong jobs market, which isn't bad. That's good. Average hourly earnings will be something that are in focus. That is another inflation gauge. People are expecting that to have grown at an annual rate of 4%, which again, higher than the Fed would like it to be, but lower than we've seen in recent times. Actually, that will be the lowest we've seen since the middle of 2021. So Wednesday, the ISM index, and on Friday, we'll get the jobs report, and actually the ISM services index will also be out on Friday. So Wednesday night, Friday night. In between those two, in the United States, we will get the latest Federal Reserve decision. The Fed meets on Tuesday and Wednesday in the US, and their decision will be released at 6 a.m. New Zealand time on Thursday morning. So this will be interesting. It's always interesting. You won't see any change from the Fed. They will be on hold at 5.5%. We also won't get any new forecasts. This is not a meeting where they'll release a new set of economic projections. So all you'll get is the statement from the Fed. We haven't done anything, but here's sort of a summary of our view. And then you will get a press conference from Fed Chair Jerome Powell. So this will be closely watched. We'll want to see what is the Fed thinking about the path of the economy, what's their latest thinking on inflation, particularly after that PCE report last week. Remember, that's the Fed's preferred inflation gauge. What are they feeling about the path for interest rates and what they might do next and when? So that will be really interesting. It will probably be the key event globally on Thursday morning. Elsewhere across the world, in Europe, I will be watching the latest inflation figures in Europe. They're out on Tuesday evening. These will cover the month of April. The market is expecting the annual inflation rate, the headline inflation rate, that is, to be unchanged at 2.4%. That's not bad, same as the month before. Lowest since the middle of 2021, and well down from the peak that we saw in Europe of 10.7%, which came in late 2022. So the Europeans have done a very good job of getting inflation down from 10.7 to 2.4. However, it's not all good news because their economy hasn't remained nearly as resilient as the likes of the US. So you never have everything quite right. In the US, inflation's a little higher than they would like, but the economy is still very, very strong. In Europe, it's kind of the opposite. Inflation has come down more quickly than expected, but the economy hasn't held up quite as well. And in New Zealand, we've sort of got the worst of both worlds, haven't we? Because inflation is still stubbornly high at 4%, and the economy is very sluggish too. So we aren't doing fantastically well either. So that's on Tuesday evening in Europe. The latest inflation figures also on Tuesday. Tuesday afternoon, we will get some activity indicators out of China. The PMIs for the month of April. These are activity indicators. Really, I think they're out at 1:30 in the afternoon NZ time. Last month, these were actually quite good. In the month of March, we saw the composite PMI. And it's called the composite PMI because it covers both the manufacturing sector and the services sector. So it's a very broad measure of activity. It actually rose to the highest we've seen in 10 months, which isn't bad given that China has been struggling of late. So that's what's happening out there across the world. Here at home, it's also a very busy week. I will be keeping a close eye on the ANZ Business Outlook survey for April. This is due at 1 o'clock on Tuesday afternoon. In February, so not last month, but the month before that, in February, this rose to the highest in almost 3 years. Own activity, that is. Own activity rose to the highest level in almost 3 years. And then the month after that, which was last month in March, that same measure fell by the most we've seen in 14 months. So it has been a little bit of a roller coaster. I think some of the strength you saw late last year, early this year, might have been optimism on the back of a new government being put in place and businesses being hopeful that that might provide a better backdrop for them to do well. However, they're probably now sitting back and thinking, well, there's still lots of challenges out there, isn't there? And while we've got a new government and we're happy about that for the most part, because most businesses are happy about the change of government that we saw, the reality is that things are still quite tough out there. So wouldn't be surprised if you see another sort of relatively sluggish print in terms of headline confidence and own activity. Last month, construction saw the biggest decline. Manufacturing, agriculture, and services all fell as well. I think retail was actually okay, or it might have even gone up, but retail has been so difficult and so challenged over the last year or two that it almost got so bad that it really couldn't get any worse. So that's maybe a little bit misleading. As always, we'll be watching the inflation indicators in this survey. Pricing intentions, they fell slightly a month ago, but they're still higher than we would like. And inflation expectations, they declined to below 4% for the first time in almost 3 years. So we'll be watching to see if that comes down any further as well. So that is on Tuesday afternoon. Wednesday, also a big day. On Wednesday morning at 9 o'clock, we will get the latest financial stability report from the Reserve Bank. Now, this is different to the OCR decisions or the monetary policy decisions. This is more of a big picture. Here are the risks to our financial system, to the economy. It's a bit of a zoom out and think about some of those long-term issues. And they release this every 6 months. It's really interesting if you want to delve a bit deeper into some of the things that the Reserve Bank is pondering in terms of those bigger picture risks. So the report is out at 9 o'clock, definitely worth a look if you're into that sort of thing. Then they do hold a press conference at I think 1 o'clock in the afternoon where they will take questions on it. And I always find it really interesting. It's not necessarily going to move markets. You won't see a big reaction from the currency or from interest rates or the share market like you would when they come out with an OCR decision, but it is still quite interesting, quite fascinating. So that is on Wednesday morning, 9 a.m. Later that morning, we will get our March quarter labour force report, so unemployment and so forth. This will cover the March 2024 quarter out at 10:45 Wednesday morning. The unemployment rate is expected to rise a little bit further. It's currently sitting at 4%, 4.0. It's expected to come up to 4.3. Now, that will be the highest we've seen in 3 years, and it would be quite a bit above that multi-decade low of 3.2% from early 2022. So unemployment is rising. It's still low compared to history, but it's rising, and it'll be at the highest we've seen in about 3 years. Now, unfortunately, this is something that has to happen for us to get inflation under control, because one of the reasons that inflation has been so high in the last few years is because you've had an overheated economy, a very tight labour market, not enough workers to do all the jobs that need doing, and that has fueled very strong wage growth, which is great on the one hand, but wage growth does tend to fuel broader inflation pressures, and then interest rates need to go up as a result. So if you want to get inflation under control and you want to get a reprieve on the interest rate front, sadly, you actually do need to see unemployment tick up a little bit and a bit of slack in the labour market. Pleasingly, one of the reasons that unemployment is rising is because we've got very strong migration. So it's not rising simply on the back of job losses left, right, and centre, although you are hearing about those too in the public sector in Wellington and some of the media companies and so forth and elsewhere. But a big part of the rise in unemployment is also more people coming into the country and adding to that pool of potential workers. So it could be worse. We'll be watching that. We'll be also watching sort of the wage growth indicators, and we want those to start coming down further as well, because that's something the Reserve Bank needs to see to have confidence that inflation will keep falling, and for that, for them to feel like they can start reducing interest rates, which is something that would take the pressure off everybody. So that will be a really important release this week, middle of the week on Wednesday. Last but not least, there will be many, many more earnings releases to monitor right across the world. There are 175 S&P 500 companies scheduled to announce results. So that's a little more than a third of the US market. So it will be another really big week. Lots of different companies across lots of different sectors, something for everyone. A few of the real heavyweights, so you will learn a lot, and that will be an important driver for markets and for confidence. Tuesday is a particularly busy day. We'll have earnings releases from 3M, Amazon, Coca-Cola, Eli Lilly, and McDonald's. Those are all in the US. So when I say on Tuesday, it's really overnight on Tuesday or into the early hours of Wednesday here in New Zealand. But in the US, Tuesday, a really big day. On Wednesday in the US, MasterCard and CVS Health will follow. CVS Health, I should say. And on Thursday, Apple, Novo Nordisk, that's the company that has made that blockbuster drug Ozempic, the weight loss drug that's created so much interest and been a huge driver of growth for that business. So they are on Thursday, and Zoetis as well on Thursday. So some real heavyweights. I think Amazon and Apple will be the two that get the most attention, because they are two of the stocks that are very widely owned, and hopefully they'll go well. We've seen a raft of tech results lately. Meta was the one that sort of disappointed the market, but what was really strong? Google very strong, and Microsoft very strong last week as well. So hopefully Amazon and Apple can follow suit. Right, that is how the week is shaping up. I said this would be a short one, and every time I say that, it turns out to be just as long as it always is. So hopefully you lasted that long. Hopefully you found that useful. I'm back on deck this week, so we will be fully back into the swing of things. So you will get a regular one of these every Saturday or Sunday as per usual, and I'll be back into doing that sort of one midweek episode on another topic. So I've already got something in mind that I will write about and record about on Tuesday, Wednesday. So keep an eye out for that one, and we will talk again soon. All right, thanks team. Thanks for listening.